So good day, Scott Picken here. I'm the CEO and founder of Migrate with my good friend RJ. We're here in Atlanta, literally just landed this morning. And you know, RJ, we've been investing here now for over 4 years actually with yourself. I was calculating this morning, it's over $22 million worth of residential development or residential houses actually that we've bought and invested through yourself with our clients. And what I'm always fascinated by, and I love to touch base with you, you know, you're the guy that's on the ground, your heartbeat, you know the heartbeat of what's happening in the market. What are you finding at the moment in the market?
That's a great question. And what we have here in Atlanta, and it's actually taking place all over America, is the hedge funds that got involved in buying real estate have put investors on the sidelines scrambling for scraps, basically. And so what we've done ourselves is to find more properties that make good opportunities for investors all over the place, is we've had to go off grid. Because if you fish in the same pond as everybody else, there's too much competition. And the risk gets higher as you're paying too much. So we don't buy as much as we used to from the foreclosures or from the multiple listing. What we've done is we've created a lead generation system that allows us to deal, again, directly with owners. So we're negotiating directly with sellers that own the properties. This way, we're able to get greater opportunities. But overall, in Atlanta and in the US, in the trophy markets like Atlanta, we're seeing less inventory, and with the less inventory, the prices are going up. There's no question about it, because our real estate market is becoming more normalized, but we're still not at the point, Scott, where things are at replacement value.
Yeah, well, I think that's a very, very important point, because certainly other markets already are. You know, when you look at the likes of New York, Miami, Los Angeles, where effectively now you're buying real estate at prices that are more expensive than what it takes to rebuild those properties, you know. And so it's interesting, because I believe intrinsic value is something that's so important. Tell me a little bit about the retail market with the existing homeowners, so existing home buyers. You know, you said at the moment, if I understood you correctly, at least a third of the people that are coming to you now are existing homeowners that are buying properties, which is a really good sign that there's a lot more confidence come back into the market, certainly than 4 years ago when we were investing.
Yeah. It's not existing homeowners, it's new homeowners. It's people that want to become homeowners. There's so many of them right now, and they've been kind of put to the side as a result of all these investors and the hedge funds coming here. Now, the one thing that we're also noticing happening is the hedge funds are leaving as well. Even though they're still here, we see the bigger ones leaving because the model is not scalable anymore. There's just not that much inventory. However, even a blind squirrel finds a nut every once in a while. We're just constantly digging on the sidelines where other people aren't looking for houses, and that's why we're able to compete. Many of the people that we're selling to now are wannabe homeowners because there's not that much inventory. So when we put stuff on the market, we have a price for homeowners that's significantly higher than the price that we're asking from our investors, because investors won't pay that much money.
Let's talk a little bit about those investors. You know, we were talking earlier about it, and you know, a lot of people, whether it's China, France, South Africa, Brazil, there's more and more uncertainty in the world, and more people are trying to get their money into first world markets. And with Brexit and concerns in Australia, even around what's happening with resources in China, it seems to be quite a large focus to America.
We do business on several continents, and if you take a look at the South American continent just by itself, the disruption in the economic policies for Brazil, for example, the craziness that's gone on there. We've got the Olympics coming up. It's no different in South Africa. You look at what's happening in Europe right now, and yes, more money is continuing to come to the U.S. because it is perceived as the safest economy, in spite of the theatrics with our own politicians running for government right now, running for president.
Well, I was going to ask you, you know, I get asked this all the time, and you know, do you think it's going to make any, as an investor, you know that I look a lot at numbers and fundamentals and strategies, you know, do you think it's something that we need to be aware of, whether it's, you know, Trump or whether it's Hillary, you know, Hillary Clinton, in terms of, you know, the different outcomes and the different forecasts? What's your opinion? You've been doing this since 1979, so you've seen a few changes in cycles.
Listen, what you see in the media is going to be like, not orchestrated so much, just comical. Because these two people actually hate each other, and they both have so much dirt on them in so many different ways. But what I would tell everybody is just play the game. Throw out the newspapers, turn off the freaking TV. It has nothing to do with your ability to make money, unless you become paralyzed and stay on the sidelines. People who are staying on the sidelines are just losing. Look at what the interest rates are in bank right now. I think it's in Germany. They have a negative CD. You only lose this much money if you put your money there for 10 years. Anybody can beat that. You know, we've lowered the barrier of entry into the real estate market with your crowdfunding platform, as well as people being able to buy single family houses that are completely managed and they're passively invested. People who sit on the sidelines and don't do anything deserve exactly what they get, and they're going to have an erosion of their wealth because it's going to get beat up by our currency, because the American currency is going to continue to get stronger as the rest of the world gets weaker. Is that a good thing or a bad thing? I say the hell with it. Just play the game. Invest your money. You got to get it out there. If you could see your money in a bank account, it's not invested. You're going backwards.
Yeah, no, look, I mean, that I completely agree with. My last question for you, fascinating what we were talking about a little bit earlier. You've got a model that really works. I know that. I've helped hundreds of people invest with you. I've invested with you. And to be honest, we've got, more than 70% of our clients are actually repeat investors, which I think is testament to you and your team and what you guys do. You said to me you're looking at other markets. You're very strong in Atlanta. You actually don't even live here. You actually live in Florida. Why looking at other markets?
It's like, why do people do the things that they can? Why does Richard Branson do the things that he can? It's because he can. I live in Tampa. I have a daughter that's in the business. It's very easy for me to buy houses. So we've created an entire campaign for Tampa, St. Petersburg, and Sarasota. And we have other markets throughout the country where people need to have the skills that we have. So we've set up a franchise model for other people to repeat, to just kind of do what we're doing in their markets. The reason we do it is because we can. There's a tremendous opportunity there, and the good deals come around every 24 hours.
Yeah.
Anybody who thinks that the market's done, it's over, it's out, it's too high, that's silly, because it's all about negotiation. The best deal comes around, but more importantly, you still have to have your money invested. And if it's so easy, you could throw a dart at the board and make 6% in America. You could make 6% just like that, but the real money to be made is not just on the cash flow, it's going to be on the upside because our values are still high.
Yeah, and I think that the point I always say to people, it's not actually about investing in property, it's actually about investing in partners. And I think you and your team are a classic example of that, and I'm quite excited that now there's an opportunity to go and look at other markets, but with someone we trust. So I always say it's about partners, and I hope that there'll be many more decades ahead of us doing business together.
Well, fantastic. And you know what? As many markets as there are in the U.S., this is still my favorite market.
Oh no, don't get me wrong. Atlanta's been very good to us. It's our top market in the US by a long way, and I certainly see the fundamentals very strongly in place. So anyway,
Fantastic.
awesome to catch up again.
Always.
Cheers, mate. Bye then.